All right, hope everyone's having a nice weekend. This is Koosh. I'm doing the standard weekend market update here, and we're gonna go through Bitcoin. We're gonna go through total three market cap denominated in gold. It's a chart I posted on my X account yesterday. We're gonna go through Nasdaq. We're gonna go through SPY. We're gonna go through the dollar, and I think that's gonna cover the agenda for today. Just a reminder, I'm not a financial advisor. Everything I talk about, could go up, that could go down. Could go sideways. I'm just giving you what I see and what I believe is going to happen. The market's going to tell us after the fact. Obviously, if in fact we were accurate or not. Uh, I've got the Bitcoin weekly chart up, and nothing's changed, folks. This is a little bit different of a chart that I presented over the last month. I've been presenting that reaccumulation schematic, and essentially we can see it here too, right? This is just different labeling on this chart, but our massive reaccumulation event and our handle, right? So reaccumulations, rounding bottoms, cup and handles, these are all the same thing. Wyckoff, Elliott wave, I use them all. Your cup is essentially a reaccumulation event, right? Sometimes you have springs, sometimes you don't. Sometimes it's a secondary test and it's a little bit uglier as it comes out. Springs tend to resolve a little bit quicker with cleaner Elliott wave counts, like we're seeing here with the 1, 2, 3, 4 on Bitcoin, and I think 5 is in front of us. The handles typically are your corrective phases, and it's very rare to see after such a long reaccumulation, macro reaccumulation event, and you get a handle for this thing to then break out with the least amount of energy after such a compressive event that essentially took the better part of 5 years. And so while people are worried and concerned, that's a good thing. That's a very good thing because the dominant structure here that came through behind it, so the energy in which we've entered this move, essentially took 5 years to get to, and it's not an obvious type setup, which is great. This is what we want. When everyone is expecting something, in my opinion, that tends to be the least likely outcome. Is everybody expecting this bull run to essentially kind of get kicked off here, where with our first true several month, 6 month, 7 month, whatever it may end up being, and this is my speculation of just markup, 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 where we wake up every morning and prices are materially higher. We really haven't seen too many of those phases. We've seen weeks in time where that's happened, weeks in time, but the market participants, for the most part, haven't been positioned in the retail, at least part of this thing has been positioned in altcoins and not in Bitcoin. The institutions have been, most certainly. If you look at the ETF flows, that's for certain. And on the other side of this, the ETF flows, I think, also tells a bigger story. I think they're a lot less speculative, and this is just kind of my own opinion. If I'm a very large fund and I'm deciding to take a position, a substantial position on Bitcoin here, I understand that there's risk involved in a downside scenario, but my view is 4 years. If you're putting in a percent, up to 5%, I believe is some of the max in some of these hedge funds in an idea, or 2% or 3%. My thought would be you had done the work up to this point, and maybe you have, maybe you haven't, but the time frame is a 4 year time horizon. And so much of these sharp corrections are just designed to get speculators off the scent of what's to come. And I think that's what's going on here. I really think that's what's going on here. And the least expected outcome I can tend to believe is a massive rally continuing here with two very large impulses. Now let's speculate a little bit on the short time frame as to what I'm seeing as it compares to previous spots of doubt in the market. And we had one here. Okay, remember this is where I started doing my YouTube videos. We had a big one here, but let's just look at the trend. And I'm defining the trend. I use the 30-week simple moving average. These are principles taken from Stan Weinstein's book, How to Profit in a Bull and Bear Market. But I'm also using the 50. So the 30 simple moving average is on top, it's red. The 50 is on the bottom. And I want to look at the relationship between these two moving averages at these points of maximum doubt. So let's start with our first one. And mind you, where are these points of maximum doubt occurring? That's the second part of this analysis. The points of maximum doubt occur at the most bullish points in these structures. What do I mean? So it's the opposite, right? It's the old opposite of herd mentality. Everyone gets bearish when you really should be bullish. Whereas you should always be bullish on Bitcoin, and that's what you see with me, right? Because I don't have a traders and speculators mentality. I'm not looking to sell a pump and buy it back lower because that just doesn't work. I'm sorry. Despite what everyone's trying to convince you of, it doesn't work. If it did, Michael Saylor would hire, all the best traders and just do that instead of DCAing. I can guarantee that. All right, so where were the most bullish structures when people were the most bearish? That's number one. That's a reaccumulation range with a spring, and we have a flat correction with an SOS sign of strength at a 1-2. So from an Elliott wave standpoint, from a Wyckoff standpoint, from a trend analysis standpoint, the 30-week was breached. And that's why, in my opinion, this took a little bit longer to resolve. Let me really zoom in on this. And so what didn't it breach? The 50 simple moving average. And so we had a situation where we had a lot of space between the bottom wick and the 50. We breached the 30, and we had 1, 2, 3, 4, 5 weeks where it basically consolidated under it. And then the 50 closed the gap. Okay, the 50 closed the gap. So the closest gap between the candle wick and the 50 occurred on September 11th, 2023. That happened to be the beginning of the major impulse into March of 2024. So September, October, November, December, January, February, March. And this is where MicroStrategy made that major run. And really made the meat of MicroStrategy made the meat of its move in that area. Okay, from January of 2024, January 22nd, 1, 2, 3, 4, 5, 6, 7 weeks, MicroStrategy made the meat of that move. Okay, these things can happen very, very quickly. The timing is very difficult. All right, so that's where. So the notes taken on this analysis is this. Here's notes taken. Here's the takeaway. The takeaway is the 30-week isn't enough to necessarily inform how close we may be to a reversal. The 50-week isn't enough, but the space between that bottom wick and the 50-week, when it was the closest to the reversal. That's the note taken, and it's an N01, so it doesn't mean anything. What's our next? Let's use those notes. Those notes are on our, on our mental clipboard. And let's take a look at the second situation of circumstances that was fairly similar. And this is that long, drawn out, oh my word, was this one heck of a consolidation. March 2024 to November, essentially, we broke back above that previous all-time high at 73 and change. But we're doing the same exercise. We're saying to ourselves, okay, first breach of the 30-week occurred here, the week of July 1st. Had a fair amount of space between the bottom wick and the 50. Then we came out of it 1, 2, 3. So that impulse out, it wasn't an impulse, but it may have fooled us thinking this was an impulse. 1, 2, 3 weeks out up to 68. It's game on. Nope, failure down, breach the 50-week simple moving average on August 5th. And then 1, 2, 3 sputtered and back to test it again. But in essence, this marked the bottom. Okay. So the space here was non-existent, it breached it. Point being is that first instance where the 30 SMA was breached didn't really tell us a lot. The 50 in relationship to the 30, and notice the 30 capped this thing. The 30 capped it for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks. It capped it. And so now we've got an N of 2 where the relationship between the space on the bottom wicks of the 30 and the 50 gets closer to 0, and that marked the bottom. So it was closer in that last consolidation I just shared from September of 2023. It hit and reclaimed August of 2024. Now let's do the same exercise. We got that in our clipboard. Let's do that same exercise with what's going on right now, okay? And here's what's going on right now. We have a breach of the 30-week reclaim with that really bullish candle that wasn't confirmed because of the next week, okay? And breached again and closed under the 30-week. So far the 30-week has been capping this, but we had some space between the bottom wick and the 50, okay? Just like the first and just like the second I shared with you. And now we're in week number 3 where we close the gap and we really front run that 76,334 level, which again, in theory, we're in a stronger position in the market than we were in those 2 instances. Why are we in a stronger position? We are in an expansive high time frame breakout, a 5-year expansion compression event that is broken out. That theoretically means this is stronger. Theoretically means that should get front run. Theoretically means that the bottom is likely in. Again, charts don't give probabilities, but I'm doing an exercise of speculative probability here in my mind using 2 other scenarios with similar relationships and these 2 important moving averages that the market has respected and told us a story about so far on 2 occasions. And so we've got less space. It was front run, and we're reclaiming the 30s. I'm doing this video here Sunday around lunchtime. And I've long claimed a decisive with the space being almost non-existent here, our first decisive candle off of this 30-week, to me, is going to signal the expansive move. Even though that doesn't guarantee anything. We saw it twice, right? Okay. Here, this was a decisive close back on July 15th, 2024, that week. Decisive close over the 30 that did not start the expansion, okay? But look at the space between the MAs, and it closed that gap. Back in, what did I just do there? Back in 2023, it was the first decisive close, okay, above the 30-week after we closed a gap on that 50 with a second retest, essentially. That's what I'm kind of talking about here is you approach the 50, not quite, and then the second, you get a little bit less room, buyer step in, kind of a last chance, if you will, and then the market reclaims the 30, and then it's gone. And so that's my perspective here. That's my perspective here. Although in short time frames, I can see why traders and speculators are bearish. It's because the market is trying to instill that feeling into participants and the speculators before it makes this big move. For the members and the subs, I posted that video of kind of how I was looking at that bearish alt for maybe one more leg down. But again, this is the high time frame rules all, and this is the most important chart. Could we, of course, go down one more time and get a test of this at 75? Sure, we could. Kind of do the 3 dives pattern, right? And then it goes, sure. We'll see. But again, I wouldn't be surprised if we didn't and the market moves from here. All right, next, total 3 gold, giving us a lot of clues, so many clues in this chart. This is total market cap excluding Bitcoin and excluding Ethereum. Basically, the crypto ecosystem minus the 2 largest by market cap assets, being Bitcoin number 1, Ethereum number 2. Not going to spend a ton of time on this video. This section only to note two things of importance, folks, okay? For me, there's a lot of alpha in, if you want to do this on your own, you look at a parabolic move in your asset class on high time frames and then chart out, the three big moves afterwards. And A, B, C. A, B, C. And then look at the relationship between the A wave, and then the B wave, checking back to the 30-week, the B wave, first check back to the 30-week, and draw a line out to that level. What do we see? We see this A wave pivot is really important in basically distinguishing two markets, okay? That's market number one at the bottom. This is reaccumulation. A wave pivot. This is market number one, reaccumulation, okay? Breakout, 1-2 test. Where does it happen? Right at that level that the B wave fails. Check back to the 30 and fails. So same thing kind of going on here, that level, 1-2, back to the reaccumulation range. And so very similar in structure and time to what I'm seeing. Boom, what we saw there, what we saw here. A lot of clues in this one, a lot of clues. All right, next, Nasdaq. And I'm not a big altcoin guy. I'm not putting net worth in altcoins, right? That's, for me, it's Bitcoin. But that's a bullish chart for altcoins. That's for sure. All right, next, I think you've seen this one for me for a while. This is trend change. Look, the takeaway from this is a Nasdaq. This is a weekly. I've got fear and greed down here at the bottom. Okay, this is fear and greed. Okay, greed is green, fear is red, extreme fear is this line all the way at the bottom. Let me get this out of the way. And so what's the takeaway here? The takeaway is that the assumption should be a V-shaped recovery. Why? Because the market has shown us, especially when there's extreme fear. When there's extreme fear, 1, 2, 3, 4, 5, 6. I suppose you can call these extreme fears. All of those instances have led to V-shaped recoveries, V-shaped recoveries, V-shaped recoveries, V-shaped recoveries to the tune on average of 24% in the Nasdaq. This is going back to 2018. When are we vulnerable? We're vulnerable on a dip when the market participants aren't nervous. Where does that happen? Here, boom, no panic. Boom, no panic. Where was there material downside in a trend change? Boom, boom, to the tune of 13% more downside, to the tune of 24% more downside since 2018. Does that mean we're V-shaping from here and it's gone? No, that doesn't. That just means that it's highly unusual. It has been, this chart is saying, since 2018, for the market participants to be expecting more downside, a crash, whatever, bear market, and for that to come. And in fact, it tends to be the opposite, and that's a reflection of positioning. If the market participants are nervous, they've already sold, kind of creating a vacuum. Again, 15% maybe of stocks traded every day is, the marginal trader, investor, institution going in and out of things. Most of it's passive. And so if those people have positioned, then there creates potential vacuums in which, V-shaped recoveries can occur when folks are mispositioned. And so that's how that's shaping up to me. SPY looks, I've got conflicting views on SPY locally. We haven't quite hit that demand I've been talking about for the better part of last couple months, right? I basically said what? This C-level pivot is hit, then this demand zone is very much in play. Very much in play. And we haven't quite hit it, and we're making what I love about SPY is we're close. I really believe we're close here because this is about as clear now after the fact as ABC, A wave, ABC, B wave, 1, 2, and 3, maybe 4 is being made here with one last drop into the 1st of April or early next week. prior to major reversal into this demand. So that's the most bearish view on SPY I have is that. The other view, the view that the primary view is that the bottom is in, and that this is making some type of, 3-4 is in, and this was 5, 1, 2. Even a check back early in the week wouldn't be bearish, and then boom, boom, high time frame 1, 2, 3, 4, 5 into the 640, 630, 620, 650 range for a major rally into the summer. We'll see. Finally, the dollar. The dollar continues to just kind of settle in here. We're looking for an upthrust. That upthrust was confirmed. High time frame, the dollar. This is very bearish posture. When you see a failure, this is like Bitcoin all-time high in 2021. November 2021 Bitcoin. What did it do? It made a B wave that actually extended past previous all-time high. That can happen. That's a flat correction. This B wave didn't, but dollar bulls were saying, oh, it's on, right? It's on. We had this trend line, right? Broke out of the trend line, the DTL, check back, and now we're going. In fact, in an upthrust, that's what an upthrust is. It's a B wave. Sometimes they're expanded flat, sometimes they're not. But this is, in my opinion, the start of a downtrend with counter trend rallies along the way, where we could see settling in here on the cloud, checking back to 105, 106 region prior to into the summer, 3, 4, 5. But this to me has impulse C written all over it. Time will tell. Folks, I hope you enjoyed that video. Have a great rest of the weekend. Take care.